Welcome to Learn Geo. Prepare for an in-depth exploration of the latest developments in global affairs, international relations, and technology. Currently, de-dollarization has become a prominent concern on the international stage. Several countries, including China, are actively accelerating their de-dollarization efforts across key sectors such as local currency settlements, oil pricing in non-dollar currencies, and divestment from U.S. debt. This trend is driven by concerns related to the misuse of the U.S. dollar's dominance and the monetary policies of the Federal Reserve. Consequently, an increasing number of nations are seeking alternatives to the dollar. For instance, on July 29, Bolivia's economy minister announced their efforts to reduce dependency on the U.S. dollar and promote trade settlements using the Chinese yuan. Major Latin American economies, including Brazil and Argentina, have also embraced the yuan for trade, expediting the region's de-dollarization process. This shift has attracted attention from experts and U.S. think tanks, who highlight the significant transition of South American nations, such as Argentina, towards the yuan over the dollar. This development raises concerns at the U.S. Treasury, given its implications for the dollar's special status in Latin America. A report from Japan Economic News on July 25 revealed that the yuan's share in China's bilateral settlements has surpassed that of the U.S. dollar for the first time, reaching 49%. Though the global use of the yuan in settlements remains at around 3% compared to the dollar, China's progress in de-dollarization is notable. The Reserve Bank of India recently announced that several Indian refineries have started using the yuan to purchase and settle Russian crude oil, bypassing the U.S. dollar. The significance of the yuan in global oil settlements and the broader international financial system is on the rise. In March of this year, a significant milestone occurred when China and France executed their first liquefied natural gas trade settled in yuan. This achievement weakened the dollar's dominant position in energy trading, setting the stage for similar future transactions, and expanding the yuan's role in oil markets into Europe. U.S. financial restrictions on various oil-producing nations have acted as a catalyst, prompting more countries to explore de-dollarization. Iran, Pakistan, Bangladesh, Sri Lanka, and India are devising plans to achieve de-dollarization through the Asian Payments Network, aiming to establish an international banking exchange operating with digital currencies. They intend to declare the utilization of the yuan and other currencies as reserve alternatives to replace the dollar's former position and influence. In June of this year, the Central Bank of Iran introduced the gold-backed digital reserve currency, which allowed Iran to secure the international gold exchange rate and bypass the U.S. financial monitoring system. This initiative aimed to facilitate increased gold acquisition, and by June the yuan's portion in Iran's foreign reserves had exceeded 22%. Notably, a substantial share of Iran's oil purchases during the past 2 years settled in yuan or euros. The continuous shipment of over 30 million tons of Iranian oil to China underscores the yuan's vital role as a currency for oil in Middle Eastern oil-producing countries. Major oil-exporting nations like Saudi Arabia and the UAE have indicated their intent to explore non-dollar settlements for specific buyers. Moreover, the UAE is actively pursuing the establishment of a Gulf region offshore center for digital yuan, advancing de-dollarization efforts in the Middle East. A survey conducted by asset management firm Schroders revealed that approximately 70% of surveyed sovereign investors and 57% of global central banks are considering repatriating their gold assets held in foreign vaults like those of the Federal Reserve and the Bank of England. This shift is driven by concerns of potential asset freezing or seizure, surpassing the 50% reported in 2020 and anticipated to rise to 74% within the next 5 years, particularly during periods of special economic significance. To ensure the safety of their gold and pursue specific economic strategies, several nations have opted to store their gold reserves in places like New York and London, often as collateral. However, an increasing number of countries are now repatriating their gold holdings to ensure utmost security. An undisclosed European Central Bank official revealed that their institution has been increasing its gold reserves over the past decade, some of which were stored in the underground vaults of the Bank of England in London. Nevertheless, these reserves have been repatriated back to their home countries to ensure gold safety. Malaysian authorities have proposed introducing a Pan-Asian gold-backed currency to replace the dollar for interregional trade within Southeast Asia. This move is motivated by the perception that gold is more stable than the dollar. While the US dollar remains a cornerstone of the global financial order and is unlikely to change in the near term, an increasing number of countries are exploring and engaging in non-dollar currency transactions. The global BRICS nations are preparing to unveil a unified gold-backed currency in August of this year as an alternative to the dollar. Currently, 41 countries, representing over 60% of the world's population and a third of global GDP, are involved in this initiative. This includes nations from the Middle East such as Saudi Arabia, Iran, Pakistan, the UAE, Argentina, and European countries. Iran's state television website reported its welcoming stance on the BRICS nations' introduction of a gold-backed common currency plan, emphasizing its potential benefits for de-dollarization efforts. Countries like Iran, Saudi Arabia, the UAE, France, and Argentina have expressed intentions to utilize this currency for cross-border transactions. As a signatory to the petrodollar agreement, Saudi Arabia, along with other Middle Eastern oil-producing countries, is transitioning towards a Chinese market and adopting the yuan for their transactions. Cracks have started to surface in the petrodollar agreement between the US and Middle Eastern oil-producing nations, and these gaps are progressively widening. Saudi Arabia is increasing its investments in yuan assets while considering joining the Shanghai Cooperation Organization and enhancing collaboration with Chinese companies. In the near future, cross-border trade settlements using digital yuan are on the horizon for countries like Iran, Saudi Arabia, Iraq, the UAE, and other Middle Eastern oil-producing nations. This signifies a significant step in the de-dollarization process. The Saudi Central Bank has outlined its intention to create a cross-border settlement system utilizing a gold-backed digital currency. A report from the World Gold Council highlights a substantial increase in Middle Eastern central banks procuring 78 tons of gold in the first half of 2023. Notably, nations like Saudi Arabia, Iran, and the UAE are aligning with the global trend among central banks by intensifying their gold reserve holdings, particularly amid the context of worldwide de-dollarization. In efforts to uphold the credit and currency standing of the dollar, the Federal Reserve refrains from hindering or rejecting the repatriation of gold assets by countries like China. Janet Yellen, the U.S. Treasury Secretary, acknowledged the formidable nature of the dollar's reserve status in an interview with the media on July 31st. However, she also cautioned that the ongoing debt ceiling crisis within the U.S. is significantly eroding the global reserve currency status of the dollar. As a consequence, numerous nations are expediting the establishment of autonomous financial systems detached from the dollar, a move that holds the potential to considerably impact the U.S. financial system and national debt. Thank you for watching, and stay tuned for more insightful updates in the future.